This is the Investor Connect podcast program. I'm Hall T. Martin. I'm the host of this show in which we interview angel investors, venture capital, family offices, private equity, and many other investors for early stage and growth companies. I hope you enjoy this episode. Interested in raising funding for your startup? For your next fundraise, consider 10 Capital Syndicate Platform, an online portal using a special purpose vehicle. The Syndicate Platform allows for online investment and access to over 12,000 accredited investors. Log into the 10 Capital Syndicate Platform to find your next investment. To learn more, go to 10capital.group/SPV. Well, hello, this is Hall Martin with Investor Connect. Today we're here with Rohit Gupta, Managing Director at Future Communities Capital. Future Communities Capital looks for technology entrepreneurs focused on disrupting legacy industries such as government, healthcare, finance, and real estate. Rohit, thank you for joining us.
Pleasure to be here.
So tell us more about your background. What did you do before investing in early stage companies?
Yeah, that's a great question. I was at another fund, and this was early 2008, and we were heavily focused on real estate, but we sort of had a broad mandate of what we could do with our capital. I kind of started to see, early 2008, like most people, things were not headed in a good direction, right? The conversation with our board was, even though we don't have like risky assets on our books, we don't have like bad debt, we don't have any of that stuff. If real estate as a whole tanks, it's not going to be comfortable. And so we started looking for, diversification, we started looking at other strategy, other asset classes. And I really said, venture, I think, is our place. And that kind of just started everything. We just did some early deals that, our first four deals were absolutely tremendous. And that kind of started things for us.
Great. So what excites you right now?
Right now, venture's in a great spot. I think obviously capital markets have been tremendous this year, and we've had more exits than we kind of know what to do with. And we're just sort of humming along, and we have a interesting new strategy that we're pushing at future communities, and things are great. I think the world is sort of at this moment where innovation is very critical across the board.
Right. So you see a lot of startups and a lot of investors out there. What's your advice for people investing in startups? What do you tell them to do before they write that check?
Right. Okay. Venture capital is probably the easiest industry to become a part of, because all you have to do is write a check and all of a sudden you're a venture capitalist. But it is the hardest one to be good at. And I often tell people, everything looks good in a slide deck. Right. I mean, we have a number of LPs and folks that we've done business with who are new to venture capital. I say, don't put all your eggs in one basket. Don't put a lot of your money in this asset class because it's super risky. And, really you have to dig down past sort of the slide deck. It's not just hopes and dreams and unicorns, and it's the dirty work. How are these folks going to sell this thing?
Great. And then on the other side of that table, what's your advice for people running startups? What do you tell them to do before they go out to raise funding?
I guess it depends what stage they're in and what kind of funding they're looking for, right? So the pre-seed investor is different than the A, different than the B, and then, so on and so forth. The main thing is to have all their ducks in a row, right? Having their story in place, being able to pitch it well. And assuming that's done, get a warm intro. It is hard to go to somebody cold and get a check. Find somebody in the middle that can facilitate, bridge, an introduction to anybody. In the world of sort of LinkedIn and social media and stuff, it's not as hard as it seems to find somebody in your network who can come through with the funding.
Great. So let's talk about the state of startup investing. You've seen a lot of it. How do you see the industry evolving from here?
That's a great question. And, there's sort of like the micro, the macro of it, but there are these, massive funds that sort of can dominate, right? Whether it's SoftBank, whether it's Tiger Global, that can just do, I don't know, however many deals a day, right? Like we get into some crazy numbers really fast. Where we sit though, as a fund is we don't want to have those problems. We don't want to look at the same stuff they're looking at. We're looking at kind of the underserved, weird businesses, startups who kind of are not from, the valley. They don't have the same story, the same polish. We want folks from the middle of nowhere. There's a market for both of them. It's a little tougher to say, I'm going to go out to Buffalo, New York and find a great founder out there, but we'll do it. We have been doing it. It's been, I think, a key to our success is that secondary, tertiary markets, and the founders out there have better returns than sort of the folks who kind of are here in the Bay already and have a high price, high valuation.
And so what's the biggest change you think we'll see in the next 12 months?
Wow. I mean, what was the biggest change over the past 18, right? Like change has been so fast. I'm a coffee and handshake guy. Always have been. I want to meet a founder face to face, get a cup of coffee, and we'll just sort of hash it out. And that world, before 2 weeks ago, was on pause for a long time. And for me personally, it was a little bit of an adjustment at first. Say, okay, I'm just going to meet people over Zoom and then wire money. And now it's fine, I guess. It's different, but it's fine. It's just sort of rolling with that change. I think that the amount of money in the ecosystem is going to it's going to drive things in a different direction, right? Well, you know what? Let me take that back. There's a little bit of push and pull because as things start to slow down, if we start to see the economy on a macro level, like, inflation, all these sort of worries, if that stuff actually starts to creep up and happen, then valuations drop and interest drops. But there's so much money in the venture ecosystem, it can keep things propped up for a long time.
Great. So let's talk about your investment thesis. What exactly is it, and what's your criteria for looking at startups?
This is where it's interesting for us. We look at legacy industries. You can think government, healthcare, transportation, prop tech, big markets, very slow, very difficult to innovate. We like those spaces. We think that they're ripe for innovation, ripe for disruption, and we think that we can sort of help those startups bridge that gap.
Cool. And so can you mention one or two startups that fit that thesis?
Yeah, we recently did a deal, founder in Buffalo, New York, Ognomy, Ognomy. They are a sleep apnea solution. Absolutely love that company. Sleep apnea is, 80% undiagnosed and very long tail of low compliance, right? Most sleep apnea sufferers, even if they have a CPAP, they don't use it. And like the long tail of sleep apnea is chronic disease and death. It is a brutal sort of like gap in our healthcare system.
Cool. So what do you think is the main challenge startups face today that you deal with?
Wow. The main, I think work from home has sort of changed things a bit. Before I would have said one answer, but today it's okay. How do we build a team of maybe 5 to 10 people, very close knit, working in very, cramped quarters and lots of face-to-face time? And how do we do that over Zoom? How do we sort of retain that culture and that drive when conceivably people could be in, 3 different time zones on a given day? It's tough. It's a tough thing to figure out. And I mean, honestly, even the big companies, even here in our office, we sort of struggle with it. If they get past that, then, it's a typical startup stuff. It's people problems. It's how do we go get our next round of funding? What's our deployment schedule look like? Are we moving fast enough? The same game.
And then what's the challenge the investor faces in today's world?
Well, okay, putting my investor hat on, our challenge is how are we managing so many deals, right? So before, Mr. Coffee and Handshake, you'd have to come to San Francisco to meet me, right? But now it's, in a given day, I'm talking to founders in Asia, Europe, East Coast, West Coast, Central Time, all over the place. And it's just sort of, my hours are crazy now. I assume everybody else is too, but it's almost like too much of a good thing these days.
So how do you think the internationalization is going to work out if you start into people all over the world? Entities don't exactly align, currencies don't align. You're not there to work on it. What do you think is the solution on that?
I think it's different depending on the country and depending on the stage of the company. YC has done a pretty good job of telling companies you're going to incorporate here. Mm-hmm. And that's, for a lot of startups, that kind of what they say, whether it's a safe or whether it's this sort of like localization has been a big sort of bellwether in the market. But yeah, part of it is getting familiar with UK law or understanding, how does this work in the Philippines or India or something. And it's a bit of a learning curve on both sides, I think, because they approach US capital and it's like, well, that's not really how we work here.
Right. You got a distance issue, you got a language issue, you got a lot of issues that we have to get alignment on. But I noticed since many of the calls I've had that the language is English. They're happy to be dollars, happy to do Delaware C. There are firms that are actually aligning the investment instrument to be international, not just U.S. based. And so it seemed like there's a movement in that direction to unify.
Right. Look, I think that at the end of the day, we talk about exits. A lot of companies would rather go public here on the NASDAQ than going public wherever they're from.
Right. Right. It's certainly the market to go to for selling your product. And I think that's one of the biggest draws I see people coming to the US because I want to raise money, but I really want to sell my product because there's so much more here more money here, more customers and more density, that type of thing. So you see a lot of different sectors and applications out there. What do you think are some of the top immediate opportunities for investors to pursue in today's market?
Well, I guess it depends on what the investor is looking at. If I'm talking to somebody totally green, they're really looking at something where they understand it, right? The biggest risk is messing with something that sounds good on paper, but I don't know what the heck they're talking about. Having a sort of deep understanding of any deal makes it a lot less risky, But investors are looking all over the place. Like we're looking at stuff now that I don't think we would have a year ago. We're sort of markets are expanding. I think there's so for example, there's a big push right now in human performance, and we're seeing a lot of performance-based startups that I don't think those models and those ideas really even existed, earlier this year. It's become this really hot button issue, and we want to, get involved there too.
Great. Well, in the last few minutes that we have here, what else should we cover that we haven't?
That's a good question. I don't usually have something so open. Okay, well, if you're asking me what we should cover, I'm always interested in like local ecosystems. How do we build an ecosystem outside of the valley? There's like a few key areas in the US that have historically and maybe in the past 5 years have popped up as startup hubs, but going outside of those, there's tech talent everywhere, right? The valley's the valley because we imported all of that tech talent from other places. And I think there's something to be said for saying we're going to go to where the talent originated from, and we're going to get these kids and convince them to build something in their backyard.
So what's your thesis there? What do you think people should do if you're not in a major or even a secondary tech hub? How do you get it going?
It's about meeting people. It's about building that network. There's startups everywhere, right? Or people who want to build startups. And sometimes, we've seen companies and we've seen founders who were super early. Like, a friend of mine was talking about his idea for years. We would just hang out. He's talking. Finally, I was like, why don't you just go build it? He's like, can I do that? I was like, man, I'll be your first investor. Like, I've never heard anybody so passionate and so in depth about this thing. Let's just go do it. Sometimes it's taking a flyer on somebody who just has an idea but doesn't know where to start. And look, that's incredibly risky. But if they're smart and they're passionate and you want to get behind them, I would totally do it. Figure out how to build a company with them. Even if, I'm not going to be in the trenches with them, I'm there every step of the way. Let's go build a team. Let's go have a thesis. Let's go sort of like get a deck together. All that sort of stuff. That's the fun.
So how does one foster those introductions? And I agree. I think startup communities are built on connectivity and interactions, and you have to foster those. How do you foster those?
Right. It's kind of like what Brad Feld says. You put your hand out first. I think most of this stuff happens because we're good to each other. Like venture is a very weird space in the world. If you take a step back, everybody here kind of came here because we're all helpful, right? I take that to heart. Like I help people more than I have time for, because it's just part of how the game is played. I've always sort of done that, and I countless friends who do the same thing. We're always helpful to people, and I think that's how you build an ecosystem. So even if you're in Buffalo, New York, or you're in North Carolina, like some of our founders, they find other people who are helpful and they help them.
Great. So appreciate the information on that. How best for listeners to get back in touch with you?
I'll take it back to the beginning. You can find me on LinkedIn, Twitter. I'm not on Twitter, LinkedIn, whatever. But the best way to find me is through a warm introduction. The conversation moves so much faster if you just get somebody in the middle and say, like, you should talk to this guy. I'll do it every time.
That's good advice. Well, I want to thank you for joining us today and hope to have you back for a follow-up soon.
Would love to. This has been a lot of fun.
Investor Connect helps investors interested in startup funding. In this podcast series, experienced investors share their experience and advice. You can learn more at investorconnect.org. Paul T. Martin is the director of Investor Connect, which is a 501c3 nonprofit dedicated to the education of investors for early-stage funding. All opinions expressed by Hall and podcast guests are solely their own opinions and do not reflect the opinion of Investor Connect. This podcast is for informational purposes only and should not be relied upon as a basis for investment decisions.